Hey, good evening, everybody. John Henry Soto here. Welcome to JHS what's the name of my show again? JHS Interviews. Tonight, I have Mark Orlowski. He's going to be on, real estate agent and stock market investor. His second time here. I want to thank him for being on here. Ladies and gentlemen, please welcome Mark Orlowski. What's up?
Hey, everyone. Good to be back. What's going on, John? Thanks for having me.
Yeah, everything's good, man. Appreciate you coming back. Yeah, I always say your name a little bit different every single time. Orlowski. Orlowski. It's a great name. I like saying it now. I think I say it like around the house. I just go Orlowski. Orlowski. So, listen, man. Last time you were here, we were almost still at the beginning of the mess. We looked at the calendar just a few minutes ago, and I had no idea that you haven't been here in over 3 months. It seems like you were just here not that long ago, but incredible. And so 3 months is in investing time. That's an eternity. That's a long time, especially in the markets, the way things have been going. So first thing we're going to do is I'm going to ask you just for a couple of updates on different markets. And then we're going to go into a little bit more of the actual process of investing, and we'll free flow it from there. So the real estate market, I know that it was sort of picking up a tiny bit when we first spoke. So how is the market now?
Yeah, so like you said, I mean, I think the last time I was on the show was May 14th was what we said. So May was what? I mean, 3 months into the March, April, May. So like we said last time, I mean, March was dead, April was dead. May was that tiny push start to try and get things going. I mean, you had the Fed lowering interest rates in the real estate market. I mean, buyers are out there getting 2.5, depending on their credit, getting 2.5, 2.75 interest rates on their loan. Incredible, lowest of all time. I mean, it's stimulating some type of movement. And now we fast forward all the way till August, and it's like we're in a completely different market. I mean, what I'm seeing is literally incredible, and that's what I tell all of my clients. I mean, it's outstanding. You have a ton of buyers and no inventory on the market. So where that leaves us is prices are rising. I mean, you have sellers that are selling their homes literally within an open house. I mean, just the other day, just this past weekend, we had an open house on a 2-family listed 20% above market value from what we would have probably listed it last year, just because of the activity. After the open house, it's been listed for 2 days. We got 3 offers, all above list price. I mean, it's literally incredible. I mean, if you're a seller and you're thinking about selling and you're watching the show, you know, now there hasn't been a better time to decide to sell your home to get top dollar. And I know I'm a real estate agent telling you this, but the market is incredible. I mean, ask any real estate agent, they'll tell you there's no inventory on the market. 2 families are flying off the shelves. They're selling like hotcakes. Wow. Prices are going bananas. It's just an incredible thing that all of us are seeing out there. And that leaves a lot of agents scrambling to try and get listings because there's not enough out there. You know, there's a ton of buyers with a lot of incentive to purchase, especially as a first-time home buyer. I mean, you're getting a 3.5% interest, 3.5% down payment, nice low interest rate. So, I mean, there's a lot of incentive out there. Multifamilies are going. People are still buying single-family homes. Condos are still going. Mostly speaking of Hudson County, Bayonne, Jersey City, Hoboken, North Bergen, Union City, similar areas in North Jersey that are, very, very hot markets. So that's really where we're at in the real estate market. I mean, the market of real estate tends to change depending on what you're doing. Are you renting? Are you buying? Are you selling? But it's a hot market overall. I mean, like in Bayonne, you can't speak for New York as much where prices have gone down. But that's, maybe a reason why North Jersey has gone up so much, because we're filtering in all those New Yorkers that are coming over for more affordable prices, better places to raise families, not on top of it as much as we're seeing the dangers of COVID. It's an incentive to move, and the market seeing it, and it's a completely different market than when you had me on last time in May.
Wow. And we did talk about that last time about we didn't realize that New York would become we knew that people were going to come over, but we didn't know it was going to be such an exodus where people literally were like escaping, like they were escaping Egypt. But it seems like that definitely would have affected the market in a positive manner. So as you look at the market now you're saying, I know you're a real estate agent, but I also know your integrity, and I know that you wouldn't say something that you didn't believe in, and I trust you. So when you say that it's a seller's market right now, would you also say that how is it a buyer's market because of the low interest, right?
Well, look, I mean, as a buyer's market, I can't say for sure because it's really all in the control of the sellers. I mean, if you want to put your house up for sale, you contact, not even as a FSBO, because we can't, go down that road. There's
Explain what a FSBO is so people know.
For sale by owner, John. That's for sale by owner. I mean, you typically go on list your home for sale with Zillow, and that's pretty much it. But if you were to contact any real estate agent, they market your property the right way. They really give it a good value,
open houses,
and a good list price with a nice open house. I mean, there's lines going out the doors of buyers. I want to give you an example. If you're a buyer now in this market, we had a buyer on our team and in our office put in an offer on a property 2 weeks ago, $60,000 over asking, and they didn't get the house because someone else outbid them. Wow. So there's banks that are lending, there's programs that are offering the loans. Buyers are out there. There's tons of them. They're forming lines outside of open houses constantly every weekend. So the control is in the sellers, but there's not enough inventory. I mean, you got to think not a lot of people are comfortable leaving their house just yet, but we all have lives. We're all looking to move on. That's for sure. So some people still do want to make that move to Florida or to, North Carolina, where they have family and they want to get out of the area that they're in. So, not as much inventory. It's really a seller's market. You're in full control. If you, trust the realtor you're with, they, do a great job marketing your property. I mean, we can almost guarantee it to be sold within 2 weeks if it's marketed properly.
So the market is looking good. It's getting stronger. It's a lot stronger than it was 3 months ago. So some reports, depending on what channel you turn on, but they say that the markets are tanking or something. So but the numbers are the numbers, and I'm a numbers guy. I like to look at the numbers, and it's important, I think, that people go out and really investigate where the market actually is and what they can actually get, rather than listen to any outlet giving with their 2 cents. So I appreciate you actually telling us that. So tell me a little bit about, let's talk about the stock market, because last time that you were here, we talked a lot about real estate. We touched a little bit about on the stock market, but not really a lot. And I wanted to kind of go into it a little bit more, because I recently just started also getting into the stock market, very lightly, just kind of like, I don't know if you know the Motley Fool, that
yeah, absolutely.
So I got into that and stuff, and just to kind of like see, since they have such a good success rate on predicting Netflix and Amazon and all these great things that they've actually predicted that people should buy, I thought, let me just look into it and let me just get a little bit of invest a little bit into the company so I could see some of the data and then make a better decision. So in your opinion, in your expert opinion, what somebody who's looking to get into the market right now, right? Because it's a very volatile thing, and you need to be, and I know, you're looking at it constantly. When I was in the office, you're just like, excited, but it's a game, it's a fun game that you have to kind of really pay attention to, but it could also go the other way. And this is why people are so afraid of investing in the stock market. Mm-hmm. Real estate seems a lot safer, right? Because the property is not going anywhere, and a piece of land on the planet is always going to be worth something because it's a piece of land on the planet, right? So how can somebody get started in that? What's one of the first things they should do?
Mm-hmm. Before I go into how to get started, mostly I'm going to give like a little background on how I got started.
Oh, sure.
Yeah, typically, the stock market's a scary thing. You don't learn it in school. They don't teach you anything about it. It's literally a go on your own. It's like riding a bike for your first time without training wheels. You got to figure out everything, maybe pick up a couple books, read a couple articles.
Right.
I got started in the stock market much earlier than I kind of did with real estate. I mean, I got my license when I was 18 for real estate. I started investing money in the stock market when I was a sophomore in college. So I had to be about 20, but that's more hands-on because I'm, in control constantly with my own money, doing it myself. And there's a ton of platforms to get started on. That's first and foremost. I mean, if you read a couple articles, there's a bubble people are talking about with a lot of people with the unemployment numbers that happen. A lot of new investors were coming to Robinhood, which is a free app to trade on.
Mm-hmm.
So they call it the Robinhood bubble, where it kind of inflated prices, but we can go into that later on. But I started on it as a sophomore in college with my own money, and you don't need a lot of money to start. That's first and foremost. People think you need $5,000. You look at Amazon, Tesla today just passed $2,000.
I saw that, yeah.
So, you look at this and you're like, what? One share of Tesla, I got to buy, I need $2,000 to buy.
Jesus, I wonder what it opened on. I don't have that information. Like what was the price when it opened?
Yeah, it's not that tough. I mean, I got started with $500. I mean, I grew my portfolio exponentially. I mean, amazingly in these couple of years that I was able to do it, and it's all through just research and following up and really learning the data and picking up an article, reading something, understanding how the company moves and how it works. What its groove is like. How is it doing business? What is it for the future of that company? And with coronavirus, a lot's happened. I mean, like everyone can agree. I mean, office space, not as big as it was. I mean, that affects the real estate market. It affects the stock market. I'm going to bring us back to March, where everything tanked.
Right.
And very similar to the real estate market, where it's booming now, the stock market, it has made a V shape, and we're going to refer to it as a V shape because, it dipped down,
huge.
Yeah, it was a huge dip. Biggest losses we've seen in days and in single days in pretty much the history. And it made an immediate recovery, which is unheard of. I mean, you had a lot of people on CNBC who do this, as their full-time job. They're saying, is it an L? Is it a W? Like, what's going to happen to this S&P 500? And, you have your indexes, your Dow Jones, your S&P 500, you have, your NASDAQ, and they all form, patterns, and what's going to happen with the economy, kind of predicts the future on how the stock market goes. I mean, you saw a lot of people lagging with the economy. Unemployment numbers were still down. You had companies constantly filing for bankruptcy, but for some reason, the stock market made a remarkable recovery very quickly. And, some people chalk it up to the optimism of investors saying that, the future's bright. Some say they don't understand why. Some blame it on the Robinhooders that I just referred to, just getting in because they lost their job and they want to start on the stock market because why not? I mean, they have all the time in the world in their hands now.
Right.
There's everyone will have their own reason why, but we have to analyze where we're at, where we were, and look at, companies as a whole. I mean, the stock market is made up of tons and tons of different things. I mean, you have mutual funds, you have ETFs, you have single stocks, and everyone's going to say, well, where do we start? John, Mark, where do we start? Do I buy a single stock like Warren Buffett does? Do I buy a mutual fund? And we could break down the definitions later. I mean, just a quick one. I mean, a mutual fund is like a fund of a couple of companies in a sector. You have your tech sector, your industrial, you have, tons of sectors.
Right.
And that's,
you could say it's almost in the word, it's they have the mutual companies have a mutual agreement, and that's where you get a mutual fund from.
Exactly. So those are typically less risk, but less reward. Single stocks could be differently. I mean, I'm going to just throw out the example of Tesla because in March, just this past March, Tesla dropped down to $380 per share. Today, in August, just 6 months later, it's now $2,000, and that never happens. I mean, this is a very volatile market. It goes up, goes down very quickly right now. It's not normal. But you have a lot of extra investors in people that, throwing their money, don't know what they're doing. I mean, it's a complicated thing, but
yeah, let me ask you a question because first let me just say hello to some people. Hey, Patty, how are you? Thank you so much. What's up, Matt? Thank you so much for being here. So let me ask you, because there's a lot of, you turn on the news and every network, everybody has the marketing, the stock analysis professional that comes on, and he tells you, what's going to happen, or what, in his opinion, what's going to happen. And, when you see something like this happen where they weren't sure, we got the V shape, right? I mean, we dropped sufficiently in March, and then we went up to a record numbers. So it was a really hard V, it was a hard V. And I don't think anyone ever predicted that.
No, very few people did.
Very few people predicted that. And now talk a little bit about this Robin Hood syndrome that everyone is talking about.
So it's very interesting what Robin Hood actually did to the industry of trading stocks, because what happened a long time ago is, you had a stockbroker, you had someone that you called up, you want to buy a stock, they put it in, they earned a commission. What eventually happened as tech evolved, and you had things like E-Trade, or TD Ameritrade, where you would buy a stock yourself, but you had to pay a fee. You had to pay $8 to buy it, and then you had to pay $8 to sell it. Once Robinhood came out, and it was a big disrupt in the market of all of these companies that are offering trading to individuals like you and I, they said free trading. Free. You can go on, you make an account, you put your own money in, and you could buy, you could sell, you could do whatever you want. And, that's a blessing and a curse.
Yeah, I was going to say.
For some people that are don't know exactly what they're doing, they can look at it and say it's gambling. Some people say it's educated gambling. Other people can look at it and say, well, you don't know what you're doing. You didn't take the time to learn. But Robinhood really, I think, in my opinion, offered a really good service to the world because, like I said earlier, you didn't learn this in school, and now they're offering to you a way to get involved, but they're also, putting it up to you to learn how to do it yourself.
Right.
You don't have advice from anyone. You could do it, without hearing of a stock. You just go in and buy. So Robinhood really did disrupt the industry, and now what that did was triggered an effect for all of these companies to offer free trading. So all of the ones that did, a little fee, a commission, whatever here, there, that's no more. You could go on Webull, which I'm personally on. I go through Webull. I love it. You could trade between 4 a.m. and 8 p.m., which is full market hours. The stock market operates between 9:30 a.m. and 4 p.m. Those are actual hours, your real hours. And then you have pre-market between 4 a.m. and 9:30. And then you have after hours, which is from 4 o'clock to 8 p.m. So Webull offers full.
Why not? Why don't they just say 24-hour trading? That doesn't make any sense.
It's not 20 after 8 p.m. You can't trade until 4 a.m. So there's a little bit of time where you can't trade.
And where they got to mop the floors and all that.
Yeah, exactly. You got to clean up after the day.
So let me ask you a question. I first of all, just to backtrack a little bit, people who think it's gambling, it's not gambling, because in gambling, let's say the slot machine, for instance, you can't go and read articles on how that slot machine has been operating for the last 6 months and what they're doing and how they're working. You can't go study a slot machine. You can't go study a card dealer at a casino to know how he flips the card. You can't, you can't inspect the cards. So it's not gambling. You're right. It's educated gambling. Yeah. It's not even gambling. It's an educated risk that you take.
Exactly.
But the more education you have, like a Warren Buffett who just sits there, or who sat there back in the day, and all he did was just study these things to death, and he just kind of was able to see, this is kind of an interesting indication of the way this is kind of moving right now. Then he puts some money on that, and whoosh, it goes up. When people like that talk about how someone should invest, that's really where you have to kind of start focusing on. You have to really start focusing on the actual science behind it and study behind it. It's just like anything. You want to be good at something, you got to study it. You want to be a good guitar player, you got to study it, you got to play it, you got to you want to be a good filmmaker, a good actor, a good dancer,
Yeah.
a good stock person, a good real estate person. You got to study it, and it's no different than that with the stock market.
Exactly. And one thing I want to touch upon, before people get in is, I mean, there's tons of different ways to invest in the stock market. I mean, you have people that day trade, which means they buy a stock in the morning and they sell it before the end of the day. And they can make a little profit, make a big profit. They can also lose. Day trading is one way to invest. I mean, it's not necessarily investing. People who day trade, it's more of a full-time job for them.
It's very fast too, right?
Very fast. I mean, you have to be quick. You have to know what you're doing. I don't really advise that if you're, beginning, because that's tough. That's expert stuff. I don't day trade because that's too time consuming. I put all my time into real estate. But what I do is something called swing trading, which is kind of a new, a new way to invest in the market. Swing trading is I go in, I look at what's performing in a certain industry. For example, I mean, with this entire coronavirus back in March, what we learned is that, the world is really depending on a vaccine. The world needs safety. So people need to wear masks. They need gloves. They need hand sanitizer. So, what I did was I picked a underlying market, which is, healthcare is one of them. I mean, you have Johnson & Johnson, Moderna, which is one of the leading vaccines for the coronavirus.
Procter & Gamble.
Exactly. And you have, so you recognize a need in society. People need masks. People need a vaccine. And then you go into the industry and you see, well, who's really performing and who's producing what we need.
Right.
So, for example, I looked at Moderna, who was one of the leading, who was very prematurely saying that they were, possibly able to produce a vaccine. And I looked at them, I looked at their company, and it was backed by Bill Gates. I mean, part of the Gates Foundation, and you go in and you see things like this. I mean, another quick example is you look at the future. Constantly, you see these car companies are coming out and saying they're no longer going to be, running on gas. It's going to be electric. And then after that, you have companies saying they're going to be running on water. So you have these electric vehicles like Tesla, which is why it's, rocketing. But then you have other ones like, I'm just going to shoot out some tickers. I mean, you have BTIQ, you have NKLA, Nikola, which is producing, they're producing electric vehicles, which is one way to look at the future. I mean, you say the future is going to be electric. Why not invest into a company that's going to make electric vehicles?
Sure. And again, early on, when Tesla came out and they came out with their first, when they went public, it wasn't, you could have bought. I mean, I don't even know how much it was, but I'm sure it wasn't. It wasn't in the hundreds. I know that.
There was a point of time where Elon Musk was actually talking about pulling it off of the stock market. He was going to take his company private.
Yeah.
And when he made that announcement that he was thinking about doing it, it dipped all the way down to 180. That was like the lowest I think I've ever seen it. Was 180.
Can you imagine?
It's like what is that? A 2,000%?
Yeah, ridiculous. So, 180. You mean 180?
Yep, $180 buys you one share. Now today, that same one share,
2,000, a little over 2,000.
You would have
closed over 2,000. I don't know if it closed over 2,000, but I know it hit.
To be honest, I didn't check.
I didn't check.
I'm actually in Denver right now enjoying.
Yeah.
But I did see that they broke their all-time high above 2,000. That's amazing. Good for them.
Yeah.
Very happy. Elon Musk actually today now brought his company to be worth more than Walmart.
Yes.
So you see a lot of good things happening for them. So that's amazing.
Yeah. So there is something that I've been following, and it's not necessarily, because you can also invest in not necessarily the technology, like the whole car, right? But there's within that car, there's technologies that are created also by smaller companies.
Absolutely.
So you have, for instance, like this whole network of 5G. I don't want to get into the whole 5G controversy thing, and I also didn't want to get into the whole vaccine and Bill Gates as well. But we're talking about stock market. We're talking about money and stuff. But There is also like a company that created a technology, a very, very, very important technology that is being used for these for this 5G thing. That as soon as it goes public, can pretty much, this is I don't know, I don't know if you have any information on this, and I don't want to get in trouble with stock. None of us are in the stock market like as workers, like we're not. So
none of this is insider trading.
Yeah, we're not. So, but apparently it can really revolutionize the world when this thing comes out, and it's supposed to come out very, 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 very soon. So, and it's one of those things that they pick as like they did with Netflix. When they said when Netflix came out, they were like, I think these guys are going to be the ones because they're, they have a good infrastructure. They actually understand the business. The CEO cares about not just sending out these movies in the mail, but he wants to expand. He's talking about expanding in different areas. So he's thinking big, where Blockbuster, which was their competitor for about, 2 weeks, right? And when they were competing, Blockbuster just had the viewpoint of like, no, people want to go outside in freezing cold and go into a building and pick a movie from a beat up old box. Somebody dropped the ball. So if you were investing back then and you went over and you say, I want to put my money in Blockbuster because that's a company I like, right? You get emotional about it. So there's one of your first mistakes. Yeah. So talk a little bit about, like, you said it brilliantly when you were talking about how you actually researched the company and why you did that and all that. Mm-hmm. But these smaller companies, people don't have to go for the big guys because you can invest. I mean, you can if you have the money. If you want to buy one share of Tesla, then by all means, if you want to buy one share of Apple, one share or whatever, you can do that. But the smaller companies are what I'm really more fascinated in, especially the ones with new technology where you've read what they do, and you're like, wow, this is something that the world needs, and there might be like 2 or 3 companies. So now it's where the risk comes in. Like, who's the better company? Well, now you got to read who's doing what, right? Exactly. So talk a little bit about that, about those smaller companies. Are you into that? Like, do you
a lot of the smaller companies, what they do is they have smaller market cap. Right. And that all leads to how much their prices per share, how many shares they offer to the public. Right. Basically, what that means is that all dictates on what their share price is going to be.
Right.
These smaller companies,
like what Matt just said, fractional shares and options.
Yeah. They do have fractional shares in that they're starting to offer to companies like Amazon.
Like Amazon and Tesla. Yeah.
But what we were saying about these smaller companies, I mean, some people call them penny stocks. Some people just, call them small cap.
I hate that expression, penny, because it just makes it sound so cheap.
Mm-hmm. Yeah, I know. It really all depends, and
I would call it Walmart stocks.
Yeah, Walmart stock. That's a good one. Yeah. I mean, with these smaller companies, it's tough, and with these smaller companies, what I would do and what I do is, because I do trade them. I mean, I can pick a smaller company out in the electric vehicle section that I did become fond of, is Ideanomics, and they're based in New York. They do a lot of operations in China, because China is actually one of the fastest growing electric vehicle sources, because they have a big pollution problem. But anyway, to get into that, I mean, those are smaller companies, and it's tough to invest in them long term because you don't really know. Do they have enough money to stay afloat? Do they not? And when they need more money, what they do is they do direct offerings, and they basically release more shares, making a higher supply, lowering their share price. And if you own that company, you lose money. Yeah. These smaller companies that are, trying to make it big, they're tougher to invest in long term, because then it's almost like winning the lottery. It's like investing in Amazon way back in the day. It's like, why didn't you invest in Amazon, Dad? I mean, who would have known that it was going to end up
online book selling?
Exactly. Yeah. So these smaller companies, what I personally do is you trade on catalyst, you trade on earnings, you trade, based on news. And that's what will drive the price up, because more volume comes in, more attention comes to these smaller stocks. So that's more of the swing trading that I said that I do earlier. I'm trying to think of an example, like, the one that's coming to my head is because this is the most recent one is the IDEX, Ideanomics. You trade based on catalyst, their electric vehicle, the whole electric vehicle sector was hot. They're basically the Costco of electric vehicles, where they sell commercial vehicles to big corporations that need it, taxis that are going to, like a yellow cab's going to need to change all their all their vehicles to electric.
Right.
So who do they go to, in China? Ideanomics. And it's like a hub. So, when they have a projected news to come out saying that they just shipped an order for $3 million in revenue, that drives the price up because it gets attention. It's a catalyst. It's news. A partnership could be something big that'll drive the stock up. So things like that, and that's much more short-term to mid-term trading, and that's where I say those small cap stocks really do lie. It requires more of your attention, a little bit more knowledge, a little bit more research. Actually, I would say a lot more research. You have to do your due diligence on these small cap stocks. You can't
even visit the company.
Exactly. You got to know what you're doing with them, because you can't just do it if you like the name. It's not like picking a horse at the horse track.
Yeah.
I mean, you want to be safe. You want to minimize the risk as much as possible. And, at the end of the day, you want to make money.
Right.
And that's that swing trading. I'm a little bit younger. I like to take a little bit more risk. So I like that. Someone who's older who wants to get involved and never was taught how to invest may not like that. They don't want to go on and, have to worry about it from one day to 1 week to maybe a month at a time, where that swing trading, that's the timeline on it. They might want to just say, I want to go, invest in a company and never have to worry about it. So what I'd say is you pick an industry that has a very promising future, like electric vehicles or, vaccines or, whatever it may be that you think has a promising future. And you pick the top companies in that sector. For example, Intel and AMD, they are two of the biggest companies that produce small microchips. I mean, Intel had a partnership with Apple where they're producing the microchips in their phone for the longest time. Yeah. Apple just came out, said they're going to produce their own now, drove the price of Intel down, so things like that. I want to go into this sector, and I want to see who's the big dog, who's top performing, and maybe if I like what I see, I got to look at their balance sheet. I got to look at, what is it that their future holds for them? What are they promising to release in the future? And do I like it? Does it make sense? And that's where I would put my money long term. I mean, I think that's that's the due diligence that you have to do. And there's tons of books out there. I mean, that'll teach you. I mean, that's more the Warren Buffett style of trading, where you look at a company, you got to make sure they're producing cash flow, that they can stay afloat, similar to owning a piece of real estate. It's got to cash flow to be able to pay the bills. That's long term.
Yeah, and you do also have to look at the management. Hi, Mary.
Hey, Mary. How you doing?
Thanks for checking in. You also have to look at the management of the company, right? Like, I mean, if you look at a company that's been around, let's say 5 years, and they're really producing something that's exciting, but they've had 3 CEOs in the 5 years, now you're like, well, I don't know. It doesn't seem like, why are these people leaving? You know what I mean? So there are things like that you have to kind of like also look for. And, a lot of times these people are okay with somebody going into their company and even getting a little bit more personal with them, because they're thinking of investing in their company. And it may not be like you're the big dog, but they're not the big dogs either. You know what I mean? So they're looking for any kind of support, especially if they just got on and they're fairly new. They might welcome a phone call, or, I'm thinking of investing in a company. I was just wondering if I could, take a walk around. You know what I mean?
A lot of these companies have investor relations emails that any questions, if you're an investor in the company, even if you're thinking about investing, they have these, it's investor relations.
Yeah.
Find the email. You can go on their website. Very easy to find.
Yeah.
You can send them an email. Ask them all the questions you have, any requests.
Yeah, and they're totally open to helping you, because they need that assistance.
Exactly. They need you to purchase their shares. Believe it or not.
Yeah,
that's their goal.
Absolutely. So let me see. It's a discounted cash flow model. and to arrive at future value. Yeah. So Matt's getting really technical.
Mm-hmm.
But yeah, Matt's a smart guy. But yeah, that's definitely a way to go about it. Is there another option for investing that people like? Let's say someone who here's like what I run into, right? And this is on a lot of different things. You know, you get involved with somebody and maybe like a month to month basis on a project, for instance, and they want to know what the exit clause is. You know, people who go into a certain any certain thing with the first question of, well, if I want to get out, how do I get out?
Mm-hmm.
You know, how fast can I get out? You know, those kind of questions. I think if you're that guy or gal, there's a pretty good chance you shouldn't really get involved just yet.
Mm-hmm.
It's just my own personal opinion, because if you're already looking to leave, then and you're not even in yet, then you're looking for something that's not really there. You're looking for some
quicks, you know. And then
it's not a get rich quick scheme. It's not a pyramid scheme. You know what I mean? It's nothing like that. So do you what was the app that you said that you use again for trading?
So I use Webull. I like Webull because you could trade between 4 a.m. and 8 p.m. And
you have all the hours.
Yeah, that's the thing. I mean, look, to get into a little bit more detail, I know we want to keep it very basic so that we can just try to provide a
and put out options. Wow. Okay.
Yeah, call it. Yep, options. That's another thing. I mean, me personally, I don't do as much calls, puts. I don't really play any options. I mean, you know, here and there, like Intel, for example, just dipped down very big. I did play an option on that to be above 50. I mean, that's basically saying, where do you think the future price of the stock is going to be?
Yeah.
You could buy puts thinking it's going to go down. You could buy calls going up. And that's very simple. You basically get a share at a discounted price, so on and so forth. You know, but the exit strategy, going back to that, I use Webull. It gives me more, should I say, a better, I'm trying to think of the word here, a better
option, a better choice, better.
Yeah, it's just
method.
It's a better, it's an overall better method for myself for what I do in swing trading, because for any reason, I mean, if I'm projecting a company's going to announce a partnership and they announce they're going bankrupt, I want to be able to get out of that stock as soon as possible.
Right.
Like I said, I'm a little bit more on top of it. I like to take more risk. So therefore, I get into these things a little bit more. I want to be able to trade between 4 a.m. and 8 p.m. just in case anything happens and I'm one of the first to see it. Robinhood, for example, you can't trade before 9 a.m. So a lot of these companies report earnings at 8 a.m., 8:30 a.m. If they report terrible earnings, that stock, is going to go down, and you don't have the option to sell because Robinhood doesn't offer it to you. So that's the exit strategy you could do. I mean, there's a ton of different ones. I mean, people use stop losses just so that they can walk away from their computer and their computer will automatically sell. And that's the tech. That's the beauty of what this whole stock market. It's being basically traded by computers nowadays. I mean,
right.
There's market manipulation on a lot of the small cap stocks. I mean, it's all over. I mean, these computers really control a lot of it.
Right. And you also have to be on it, right? Like you can't say I got stock in that. I haven't looked like in a week. It has to be a daily thing that you have to take a look at it and you have to kind of like study. And I think that's probably what turns people off.
And it's all about the end game for yourself. I mean, if you're a real strong believer in Apple, you think Apple's going to, take over the globe in smartphones, and you don't care, you want to hold it till the sky turns green.
Right.
Then you don't have to look at it every day. If that's your goal, stick to it. That's one of the biggest mistakes new traders make is they listen to all the noise. They listen to it. They start reading stuff online that are just coming from other day traders, other people that have, just as much money in it as they do. And they just listen to people's opinions.
Right.
And it scares them off. And one of the things that happens in the stock market is greed doesn't move as fast as fear. when people start to sell off, it goes quicker. I mean, you want to buy when people are scared. And like Warren Buffett says, I mean, it's one of his famous things. You got to be greedy when people are fearful, and fearful when people are greedy. That's just, it's all about the end game for yourself. I mean, in what I do, majority of the time is swing trading. I hold the stock for a week, a month, maybe 2 months, until I get that end result that I'm looking for, that catalyst, that piece of news that I'm looking for, because I've done my research. So I'm on top of it. But if you have that long-term approach and you think this company is sustainable over a long period of time, you could probably go a week without looking at it. I mean, I don't see that being as big.
Right. Depends on the company. And if
exactly. It depends about all your approach. Like I said from the beginning, I mean, there's tons of different ways to get involved.
Yeah.
It's all about finding your comfortability level. I mean, that's a personality trait.
Yeah, but I find it also that technology now is a little bit more unsteady because of what just happened with Intel leaving Apple. Things like that. If one of these companies, decides to go another route overnight, it really could affect a lot of the, not only that stock, but it could affect other stocks as well. Yeah. And that's the thing about even Intel right now with Apple. When that announcement was made, it affected other stocks because now people are like, where are they going to go? What's going to happen?
For sure.
Yeah. And so that's a little bit, what do you think of VR? Is that something like virtual reality? Because
that's interesting. I haven't looked too much into it, to be honest with you, John. I really.
I think if there was a company, and I've been looking, and there are a couple of them that are doing it pretty extensively and pretty incredible work that they're doing, but it's still so expensive for anybody to just have a VR unit, And I think I've spoken about this even 5-6 years ago with our broker, was basically how people are going to look at homes in the future. You know what I mean? It's going to be basically they're going to walk into the house and they're going to open the door and they're going to write with their hand. They're going to be right here sitting down. They're going to walk over there. It's going to be this whole thing. And it already exists, to a certain degree. It's just going to get better and better, the technology. So I'm always looking for something like that. Let me just get some information here from Maddie. Says options are best if you have a lower amount of capital under management. You pay the option fee and you don't actually own the stock. You own the opportunity to purchase if you do. I see. Okay, I didn't know that. At a future date. See, if you don't exercise the option, you just lose the option fee. Therefore, you can buy a bunch of options without having to buy tons of actual shares, less capital involved. Absolutely. Oh, that's interesting. Okay, cool.
At a discounted rate per share. I mean, you get the future date.
So that could be for those people that are a little bit weary of it, just want to kind of but again, the returns are a lot less, aren't they?
No, not necessarily. Not necessarily.
So if you hit something and it hits, if Intel makes an announcement that they're doing, I don't know.
Example, I mean, what was it? I forgot the date now that I think about it. I believe it was September 1st, was it? With Intel. Intel had to either go below, there were put options for, to go below $45 a share. And then I had a call option for $50 a share by September 1st. You have to exercise the option. And what happened was actually today, Intel passed $50. So you can exercise the option. And basically, I don't have to wait till the full date to happen, but you do want to, exercise the option before or, definitely not after because they'll expire.
Right.
Yep.
So in this, just read it. It's better risk management. Yeah. So if in this world where we're basically not really seeing any money, right? It's just digits. It's just zeros and ones being transferred digitally throughout the internet. One of the things that I've been looking at is the Bitcoin for a while, and I have some Bitcoin and stuff, and just looking at it, how it's actually gone up from, it was 30 cents in 2011. It was 30 cents, for a Bitcoin. So if you would have bought, I don't know, if you would have bought $30, today it's up. It's almost at $12,000. You would have $6 million basically. So it's the same kind of thing with where it's risky also because it does fluctuate just like anything else, but it's just a currency. Do you think, like I know that we talked about this earlier, and you're not in Bitcoin right now, but do you think that because we're basically just right now trading zeros and ones. As a matter of fact, when we get paid, most of the time it's a piece of paper that we take to the bank and we give the bank, and they put in their zeros and ones and they put it into our zeros and ones, and then we use those zeros and ones to buy other zeros and ones, and it's all this digital world where there's no actual thing.
It's funny because it's not even a piece of paper anymore. It's just
right. It used to be an actual piece of paper, right? You don't even get that anymore. I think you can request it, or you can request something, but yeah, you don't even get a check, right? Yeah, it's just wired directly. So what do you think the future of investing is going to be? I mean, you're a young man, so you're going to be in the game for a very long time, and you're going to see some of the most amazing changes, not just in the stock market, but just in the world in general. What do you think it's going to be like in the next 5 years, 10 years?
Wow, that's a very tough question to answer. I mean, look, for myself, I mean, we've seen it change so much already. I mean, look, I don't think anywhere in the next 5 years much is going to change, other than the types of companies that people are investing into, because, it's where the world is going. I mean, drones are now transferring our packages, right? Transporting packages. So now it's like, now it's not UPS anymore. It's a drone. Do I go look at drone? So it's like more or less.
Yeah, I mean,
companies am I going to look at? What industries are going to grow? The way trading is done is interesting in itself. That's changed to a degree where I can do it all on my own now, and I don't have to call a stockbroker. I don't have to call anyone else. I don't have anyone else's opinion. It's all up to me, which is amazing. But you got to be careful. And be careful. And that's why there's tons and tons of different ways to invest. I mean, you can go with an ETF, a mutual fund. Like we said before, I mean, there's so many different ways with higher risk, lower risk.
Right.
All a personality trait. But you just have to find their comfortability zone. Read something about it. Just do tons of research and you got to make the first step and get involved. $5 goes a long way to start. I started with $500, grew my account. Now it's not even, fathomable. And I never would have thought I would have been in the position I am today when I would have started, because I was clueless.
Right.
I was in college, and I was a business economics major. I was a philosophy major, double degrees. Didn't learn anything about the stock market. Economics didn't even teach me about real estate. It taught me about, economics, and it taught me all about the history of it, but it didn't teach me about how I'm going to make the financial freedom for myself, my family, and my future, moving forward. And that was where I had to, it was all up to my own. I started reading about, how Robinhood was giving me a better option. It was giving me an opportunity, I should say. And I wanted to take advantage of it. I started out on Robinhood, and as I got involved in it, I took it elsewhere. I went to Webull just because I learned it was a little bit of a better platform, and that was it. I mean, it's all making that first initial step.
Right.
And, I mean, people go out, and I'm a no excuse type of guy, just like you are, John. So people go out and spend $500 on a new pair of shoes. I see it done every day by my friends, but they're too afraid to put $500 into the stock market. So,
it's unbelievable.
It's it's a choice that you make every day what you do with your money. But, we see it. We see it constantly where, we get upset at all these millionaires for having all this money, but there's no shortage of success in this world.
Mm-hmm.
Just because you're successful doesn't mean that I can't be successful. There's no shortage of it. I mean, people say on the stock market there's a winner and there's a loser, and that may be correct to a degree. But you can win and someone else can win too, and that's the point. I mean, you just have to go out there, get your best foot forward, and get started. I mean, I use the stock market as a way to try and make some money on the side with real estate. But I want to make this one firm. My biggest opinion on the show is if you're going to invest long term, the best long term investment you can make for yourself is in real estate.
Oh yeah, that's always
by far. I mean, the way that the tax codes are written. I mean, the election plays a big part in the way the future of real estate and all the markets are going to go. But I mean, like you said, I mean, we have so much land on this one planet. Everyone's going to need a place to sleep.
Right.
Someone's always going to need a doctor to go to for the most part. To commercial real estate, residential. But I mean, look, real estate is a better long-term investment, I think, and that's what I look to, and that's kind of how I got involved in the stock market. Was I just wanted a shorter-term way, a second flow of income that I can learn, get a handle on, so that I could just take my capital and go into real estate.
Right.
I turn 25, 26, 24, hopefully sooner rather than later.
Yeah. Can't believe how old you are.
Yeah.
So, one of the things that you said, I think education is a big key. Educate yourself before, and there's so many things out there. There are books, there are YouTube videos, there's this video here that we just made. I think you could send it to people if you want them to kind of just get a little bit of a taste. You can call Mark up and maybe he'll help you out as well.
Things real quick I just want to throw out there. I didn't touch upon this, which before the show I thought to myself, I really want to make this an educational piece for people to come in and learn on. First of all, if anyone has any questions about what I do or what they're thinking about doing, give me a call. I'll put my number out there, 551-697-0726. But one of the best ways to get started without risking your own money is paper trading. And I did do paper trading for a full year before I put my own money into the market. And paper trading is just simulated trading. You can go on TD Ameritrade and look up TD Ameritrade Thinkorswim paper trading. You could download it onto your computer. They front you like $200,000 or something absurd amount of money like that, but it's all fake. And you just, you go based off the real market. It's all based on the real market, the real numbers.
That's interesting.
Yeah, it's amazing.
I've heard of that. For some reason, I never put that together. I didn't know what it was.
You got to do it. If you're too afraid, but you want to get started, because the best way you're going to learn is by doing and by tracking the trades you make and realizing what mistakes you make. When you get too emotional, when you force a trade, when you look down the line and was like, what am I thinking? Why did I do that?
I would say to do that for not a long term, because what if you take that $200,000 and you turn it into like 30 million?
Yeah, right. Then you get really
like, none of this is real.
Good way to get started.
That would be too hard.
Yeah, that would be the worst.
I would just do it for like just for a month, just to kind of get the feel of it and kind of get that.
Learn, some of the indicators on the market. I mean, it's all on what you're looking to do. But paper is a really good way to start. Start learning while you're reading up on some articles and books. And I
still think that technology, not necessarily technology that you purchase for the home, although there could be a lot of stuff also, but mainly like other technologies that are providing services are really something to look into. Something like Amazon, for instance. I know that they patent, I don't know if you heard about that, the blimp in the sky.
Yeah.
Have you seen that thing? The whole thing. So basically they patented this. They don't have it yet, but they're thinking of building these huge warehouses that this big blimp will lift up into the sky, and then drones will just fly in and out of them, delivering packages. And you have this kind of circular thing that has a device on it that the drone knows where it is, and it lands on it and drops it in your backyard or wherever you put that little mark, I guess, bullseye.
That blimp will be home for that drone.
Right. Yeah, exactly. And so things like that, you look at that and you think, my God, that's insane. But no, it's not. It's not. It's just elevating the warehouse. It's putting it up in the sky so we can get to. Jeff Bezos is a robot, so he's only thinking and calculating things of how to make his company better, faster, how to be more efficient, how to get more packages out, how to take faster orders, how to move. You know what I mean? He's trying. That's his robot mentality. He's got that kind of a brain. He thinks very rationally when it comes to those kind of things. Very unemotional guy when it comes to the business. So that kind of makes sense. So when I see a technology like that, or something, some possibility like that, well, somebody's got to make those propellers to maneuver that place. Somebody's got to make the engine or the sustainable. How high is it? You have to have some human beings up there at some point. So how high is this altitude? Are they planning on putting this up there? Is it going to be an eyesore for, I mean, there's all these different questions that you can research, and you'll probably see those things. I don't know if I will. I don't know how long they're planning on putting those out, but I'll be old being, what the hell is that shit up there? Get off my yard. So I don't exactly know how that's going to go, but so let's end off with a little bit of final thoughts on where do you think the market in the next, you'll be back again, hopefully not 3 months, you'll be back maybe in a month. But what do you think in a month or 2 months the market's going to be? Do you see it fluctuating? Are you concerned about it, or are you pretty confident?
So like we said earlier, I mean, this market's very abnormal. I mean, it's very, very volatile. I mean, you just haven't seen this before the coronavirus. It just was never this volatile. Going up 10%, down 10%, up 15%, down 20%, all in a day. That just doesn't happen in stocks.
Yeah.
And, that's there's a couple different factors of why that's happening. But my future outlook into how the market overall, real estate, stock market goes. I mean, a lot depends on the election, but everything is cyclical. I mean, I think the future for everyone, for all of us, and this is something that the media outlets will never tell either one of us. They won't portray this, but the future's bright. The future's very, very bright. I think, in terms of technology, in terms of where we're going, overall, it's bright.
Yeah. And in terms of the human spirit.
Yeah, exactly. And you have to find your lane, learn, research, and do the work, get involved. And that's it. It's not too complicated. It's actually very simple. Just getting involved, doing your own research. The future's bright. It's always going to be. That's pretty much it. I mean, it will fluctuate just like it is now, up and down. But it's where is it going to be 10 years from now? Right. And that's why I like real estate so much, because when you buy real estate, I don't think about the next few months. I don't think about the next 2 years. I think about 10 years, 20 years from now.
Right.
And that's the thing. Again, that's my real advice.
Yeah. Awesome. Thank you so much for that. And I think also people just want to get back. People want to live. People want to be happy. People want to enjoy their lives. They want to help others. That's really, and I think that when you said the future is bright, you're so right on that, because the human spirit is always going to want to just do the best for others and for themselves. And the markets are really, I think the market really almost can dictate also where we are emotionally, right? Mm-hmm. You think about it, emotionally, we're up and down, I mean,
yeah.
And that's why, it's the market is so volatile, because, right now we're all volatile, but that's going to clear up. And I think the market is going to be as strong as it's ever been. It's never been this strong in the history of the market. You know what I mean? And that in itself is incredible, other than I think maybe a year ago when it was, or before coronavirus, I should say. But yeah, I definitely think that it's going to be an amazing future. So, Mr. Mark, I want to thank you so much for being on. I appreciate you so much. You're very, very smart. You have an incredible future ahead of you. I look forward to seeing what you're going to do. I'm excited about it. I'm proud that we're colleagues at Costanza, and that we get to hang out and stuff every once in a while. I mean, after this whole thing is over, obviously more, but it's been really cool knowing you, and I appreciate you taking the time to be here tonight.
Oh, absolutely. I had so much fun being on the show. I look forward to the next time I'm on. And again, if anyone has any questions, real estate, stock market, I can only talk about my opinion, my experience, with what's going on. But I love questions. I love helping other people, because like I said, I mean, I'm young. I know what the right path is, but, the school system doesn't teach us. And that's my biggest, regret. So that's why I love to help out other people. So if you guys have any questions, feel free to reach out.
That's awesome, man. I appreciate you saying that. So I'll definitely have all the information on the description below if anybody's interested in reaching out to Mark. And yeah, that is all. That is all. Thank you, Mark, man. I appreciate it.
Thank you, guys.
Hang on there for a minute, and I will be right with you. Thank you so much, Mark. Take care. All right, Mr. Mark, Money Man, Mark the Money Man. That's what I'm gonna call him from now on. So he was really great information, great integrity also, which I really like. Who wants to help other people? Just a really beautiful thing. So I'm really excited that he was here, and I think I'm gonna have him come over every month, just giving us a financial update and stuff. So anyway, thank you everybody for being on. I appreciate all of you. I'll see you all tomorrow night at 9:30 live. And as always,